Welcome everybody to the Prospera 2026 AGM. Good to see some familiar faces and some new faces here as well. My name is Shubham Garg. I'm a director of Prospera Energy. It's my pleasure to welcome you to our 2026 annual general meeting of shareholders. Before we commence the meeting, I'd like to address the meeting structure and note some general reminders. The meeting will consist of the formal business described in the notice of meeting. After the meeting's formal portion, I will open the floor to any shareholder questions. To ensure a smooth and efficient meeting, I've asked certain shareholders to move for the resolutions tabled this morning. I want to remind everyone that only registered shareholders or duly appointed proxy holders are entitled to vote during the meeting. Before we proceed, I would like to introduce the members of the board of directors present today, as well as the executive and management team. On my right here, we have Dr. Christopher Moore, we have Mr. Mark Lacey, Mr. Brian McConnell, Mr. Chris Ludke, CFO, as well as Mr. Darren Jackson, Chief Operating Officer. Pursuant to the bylaws of the corporation, I, Shubham Garg, Chairman of the corporation, will act as Chairman of the meeting. With the consent of the meeting, I will ask Dejinder Judy of the corporation to act as Secretary and Marina St. Denis of Computershare to act as scrutineer. I've received an affidavit from Computershare as to the notice calling this meeting, an information circular, a form of proxy, and request for financial statements for both registered and non-registered shareholders were mailed on or about May 21st, 2026 to all shareholders of record. I direct that this affidavit, together with copies of the documents mailed to shareholders, be kept by the Secretary with the minutes of this meeting. With the consent of meeting, I will dispense with reading of the notice of the meeting. At this point, I will ask the Secretary to read the scrutineer's report on attendance.
I've received the scrutineer's report, and it shows there are personally present or represented at the meeting 44 shareholders holding or representing in person or by proxy 107,288,030 shares, or approximately 17% of the outstanding common shares of the corporation. The scrutineer's report indicates there is a quorum present. I direct that the scrutineer's report be attached to the minutes of the meeting.
With the appropriate notice of meeting given and the requisite quorum present, I declare this meeting regularly called and properly constituted for the transaction of business. Before proceeding with the business of meeting, I'd like to address the voting procedure. Voting on all business will be by show of hands on the basis that, to my knowledge, less than 5% of the shares represented by proxy at this meeting would be voted against such resolutions. The next item of business is the presentation of the corporation's audited financial statements for the year ended December 31st, 2025, including the balance sheet and accompanying statements, together with the auditor's report therein. A copy of the financial statements have been mailed to all registered shareholders who have requested copies of the same. With the consent of this meeting, I do not propose that the financial statements and auditor's report be read at this time. If any shareholder has questions or concerns, management is ready to answer these and pleased to answer them after the formal part of the meeting. The next item of business is to pass an ordinary resolution to fix the number of directors to be elected at the meeting at 5. Would someone move that the number of directors to be elected at the meeting be set at 5?
I move that the number of directors to be elected at this meeting be set at 5.
I second the motion.
All in favor, please signify by raising your hand. Based on the voting results, the resolution has passed, and I declare the motion carried. The next item of business is the election of directors. The number of directors to be elected at the meeting is set at 5. May I have the nominations, please?
I move that Brian McConnell, Mark Lacey, Shubham Garg, Christopher Moore, and Matthew Kenna be nominated as directors of the corporation to hold office until the next annual meeting of shareholders or until their successors are elected or appointed.
I second the motion.
Are there any more nominations? Thank you. As the foregoing nominees are those proposed by management in the information circular, I now declare nominations to be closed. We will now hold the election for each of the directors separately and not as a slate. As I read each of their names, I will ask for or withhold. please so signify by raising your hand. Brian McConnell, 4. Withhold. Mark Lacey, 4. Withhold. Shubham Garg, 4. Withhold. Christopher Moore, 4. Withhold. Matthew Kenna, 4. Withhold. Based on the voting results, I declare the motion carried and that all 5 nominees have been elected as directors of Prospera. The next item of business is the appointment of auditors of the corporation, and I would ask for a motion to reappoint MNP LLP as the auditors of the corporation until the next annual meeting of shareholders or until a successor is appointed, and to authorize the directors to fix the remuneration of the auditors. May I have a motion in favor of the resolution?
I move that MNP LLP be appointed as the corporation's auditor until the next annual meeting of shareholders of the corporation or until their successors is appointed and the directors be authorized to set their remuneration.
I second the motion.
All in favor, please signify by raising your hand. Based on the voting results, the resolution has passed, and I declare the motion carried. The next item of business is to consider an ordinary resolution reapproving the corporation's 10% stock option plan for the ensuing year as outlined in the information circular.
Mr. Chairman, I so move.
Thank you. May I have a seconder?
Mr. Chairman, I second the motion.
All those in favor, please signify by raising your right hand. The resolution has passed, and I declare the motion carried. If there's no further motions or business to be brought before the meeting for AGM-related matters only, I will ask for a motion to terminate this meeting.
I move that the meeting be terminated.
I second the motion.
All those in favor, please raise your hand. Contrary, if any? I declare the motion carried and this meeting terminated. I will now open the floor for questions, and then we will begin with a brief presentation about the last 12 months and the go-forward business plan. Okay, no questions. We'll be sticking around after the meeting too, so anybody that would like to spend some time can definitely do so. Proud to be here again for the second year here in a row with some tough commodity pricing environments that we had in 2025. Appreciate the support of all shareholders through those times. Spent a lot of time fixing up the company and proving out some of our operational strategies that we will discuss. And we're here now, 2026, in a bit of a different commodity price environment and definitely some volatility ahead. But looking forward to scale here as we continue our business plan of heavy oil reactivations. Just a reminder, there will be some forward-looking statements in this presentation. Please take the presentation as such. We'll begin with a brief year in review, followed by a business strategy and outlook that Chris will be talking about, an operations update from Darren, and then a corporate finances as well that Chris will be talking about. So in the business strategy and outlook, the business itself has come from a very tough place and has been successfully stabilized. We have successfully proven out our strategy of these capital efficient reactivations with 17 wells that were completed in 2025 as part of the 140 remaining reactivations that remain in our inventory. Unlocking the production from these legacy fields took some time. There were some operational challenges, there were some financial challenges, and some infrastructure issues that we had to fix and get through, which we successfully did. Also around the pipeline program and around the main batteries that we had have been upgraded. We've added a lot of winterization. We've added a lot of different systems to monitor the wells a lot better. And proud to see that there's certain wells that haven't gone down for many, many, many months now, which previously were going down every couple of weeks. And so really proving out the strategy, not just a small increase, but a monumental increase in reliability and production. reactivating the idle wells with our service rig deployment. That's our main name of the game. We're not into high-risk drilling or exploration operations. Optimizing artificial lift design. Many of you have seen our LinkedIn posts on the recycle pumps and the PCP pump designs that we're working on. Not every well is the same, and not every well behaves the same as it starts to produce. So very excited to see that strategy prove out over time. And as we mentioned, maintain uptime. It's very important for the company to go for reliability in production and reliability in cash flow versus just maximizing every barrel and then seeing service rigs and other lack of stability in what we're looking to do. Lowering surface lease and property tax costs. This has been a big initiative of the corporation in 2025, working with local landowners to reduce leases, remove extra equipment on site that we were paying property tax on, and just overall reduce the operating costs of the corporation, and then control G&A through disciplined budgeting. We've been able to successfully integrate certain softwares and remove them from the system altogether, being able to really remove some of the extra G&A on the corporation, and as well as rent out some of our office space as well. So just constant wins day after day after day. Stronger cash flow from operations, timely vendor settlements, and that leads to more capital access, allows us to grow. We've had some really, really strong months in April and May of this year, some of the best months that the company has ever had in terms of revenue and cash flows. And so excited to take that and now scale from here onwards. Our growth in 2P reserves has ended up at 31%. So we already last year had about a 40-year reserve life. That tells you that if we were to deploy all the capital to bring our pools online, we can have those pools running for 40 years at our current production. We've now upped that to 50 years of reserve life index. This is something that investors want to see. This is something that allows us to grow without needing to do acquisitions or development, too aggressive development beyond what we're currently doing. The 2P NPV ended up at $202 million. So that compares to our current market cap of about 25 million and our enterprise value of roughly 70 million. The other big win that we had in 2025 was consolidating our working interest. As some of you know, the company was saddled with JV partners that were not paying their fair share. Some of our team very familiar with that. And so very proud to say that we are now 100% owner of these properties. Not only does that make the accounting and the books easier, but it reduces us from needing to wait for other counterparties to make decisions and just have all this extra workload on our financial team for no reason. And of course, it's nice to be 100% owner in what you're doing. Average net production through the year has been 734 BOEs per day, 91% oil. A new version of our Key Wells report just got published earlier this week that shows how we have been rising over the last couple of weeks, north of that 800 BOE per day mark now, and 0 pipeline failures in Q1 of 2026. This is something that when the new management and board came in 2024, we just constantly saw pipeline failures every couple weeks that not just caused damage and environmental concerns, but also the entire pool had to be shut down to account for these pipeline failures. We got into the eye of the regulator. While we're proud to say there has been 0 pipeline failures in Q1 of 2026, the monitoring program, better SCADA systems, better ability to identify lines that have higher risk, lowering pressure and volumes on those lines, and keeping that field running as best as possible. And then, as was news released, we had a successful $3 million equity private placement that closed in Q1, including a large national bank out of Toronto that participated in that financing. Further financing discussions are ongoing. We're always interested in meeting with prospective investors as we have a large inventory base and ability to accelerate capital as dollars allow. A bit more about our reserve value relative to market capitalization. I had mentioned these numbers here just a few seconds ago, but you can see our 2P NPV10 is about 8 times what our current market capitalization is. And with us being cash flow positive and free cash flow positive now over the last few months, May especially being very, very strong, we're looking forward to take some of that money, put it back into our ground, and create this market capitalization growth as we go throughout 2026. And that equates to about 33 cents a share of 2P NPV10. That is accounting for the debt, I believe, as well. A bit more about the growth, 27% growth in the NPV value and a 31% growth in the NPV 2P reserve barrels. As many of you know, oil prices were not that great at the end of December, which is when the year-end reserves are marked. So this number is expected to increase significantly, if we were to do it at today's strip pricing, let alone as we continue to grow the properties over the next 12 months. And with that operations update, I'll pass it on to Darren Jackson.
Morning, everyone. Thanks for being here this morning. I'll just kind of run through, provide a bit more update. Shubham touched on the high points for sure, but it has been a busy 12 months. And we've purposely, one of the challenges that Prospera had in the past was, as Shubham mentioned, production reliability. And if you can't keep your production going, there's usually a reason why. You either got downhole failures, you got infrastructure issues, that type of thing, which take up capital and time and effort, etc. But we've made some pretty big strides that way. So we've had 6 consecutive months of production growth, 11 reactivations, which we've added about 87 BOEs per day at a relatively cheap cost of $7,644 for flowing BOE. We also did, and Shubham alluded to this, down in our Cuthbert field where we had a lot of pipeline failures. So what happens is, and you'll see this not just with Prospera, but with a lot of companies, that in the springtime, when the frost comes out of the ground, you get some frost heaving. And if you have pipelines that are close to failing, that's when they usually fail. And this year, touch wood, we've escaped that. So what we did is a couple of the pipelines that did fail last year, we replaced them with a different material. We went with flex steel, and it's proven its worth. Now we do have more to do. So part of our pipeline integrity program is going through a risk scenario of going through all of our pipelines within the company, risk ranking them with high risk, low risk, medium risk, etc. And those ones listed as high risk, we take proactive measures. That could be replacing the pipeline, that could be doing verification days, etc. So we've got more work to do there, but we're making good strides there. The winter program, we had 42 well winter reactivation program, including optimization. And as Shubham mentioned, the concept of which we thought we could keep these wells running at a stable rate, managing the sand effectively, has proven out. Now, we haven't won on every well, but we're winning on a lot of the wells. And with those ones that we don't win on, we learn some more about them. So, as Shubham mentioned, every well has its own personality, and sometimes you have to deal with that. And then as a result, as he mentioned, that we had a 31% increase on our 2P reserves, and loose land is hanging in there at 8-year high. So it's performing quite well. Just a little bit more detail on Cuthbert, in addition to the pipelines. So stepping back a little bit, the Cuthbert field is all about water management. It is our most prolific field in the company. It creates the most net back within the company. So we have to provide that consistent care and handling of it. But the name of the game with Cuthbert is moving fluid around. It cycles a lot of water out of the reservoir, so you have to manage that water. And to manage that water, you got to have good pipelines, you have to have a good network, you have to have the right injection wells, and you have to have the pump capacity at the plant to move. So some of the things that we did, a couple of things we did this over the last years, in addition to the pipeline replacements, is we increased our pumping capacity. We activated a third water injection pump, and we upgraded the electrical system for that, so that it gives us more control on where the water's going, how much water is being disposed of. And in doing that, it gives the operators more flexibility in bringing this well on, cutting back on this well. So it allows us to direct the water more easily where we want it to go to support the reservoir engineering component. So that was actually a very successful operation. In addition to that, when you're moving that much fluid, whenever if you have poor reliability, let's say the field goes down for any length of time, because that's a water flood and you get that continuous water pressure, it squeezes out the oil. And then it takes time to get that oil to come back. So the name of the game is keep things running. And so we've made strides on maintaining, increasing the reliability in Cuthbert, and a credit to the guys in the field. They've done amazing stuff out there, so good on them. In addition, we did reactivate, we had a couple injection wells that had packer issues downhole, which we had to go down and fix. So we did that as well, and again, it just gives the guys in the field more flexibility to move the water around. Over the last, since we came in November 2024, it's been a whirlwind, I'll tell you. We've worked over 64 wells. We've returned 21 to production across the reactivation program at a very low cost of $7,600. Based on my experience, if you can do it for under $10,000 a BOE, you're doing very well. And we were able to do it for about $7,600. And we have many, many more to go. As Shubham mentioned, we have over 140 potential candidates. So we got a big opportunity inventory. It just need the capital to execute on this. We did 17 of those reactivations were in loose land. And as well, we mentioned that we didn't drill any wells this year. So field performance, so some of the things we're focused on right now is we do have a service rig down in Cuthbert right now working on reactivating wells. Continue with the pipeline integrity program, increase the water handling capacity, and then also really monitor the VFD system and making sure that we don't have any nuisance downtime in regards to that. Loose land, similar story is, loose land's all about managing sand. And with our recycling of oil downhole, helps bring the sand up continuously. The name of the game is, again, keep those wells running, keep them moving, and with fluid going down and cycling back up, it keeps bringing that sand up, and the pump never runs dry, and it doesn't burn out. Again, production reliability. And then Harts Hill is another effective water flood. We did have a few failures last year, and we were able to bring those back online, but now we see Harts Hill starting to recover nicely and actually stabilize. And what we're seeing there is we probably got some work to do on optimizing that water flood there to actually get better results. So we're very happy with how these three fields performed. Okay, now I'll hand it off to Chris.
Thanks, Darren. Thanks, Shubham. And welcome everybody here, and just reflect on the fact that I'm honored to be part of this group today. The board that's provided, continuous support through the year, the shareholders that are part of this story. Shubham, Darren, working with you folks has been amazing, and really want to highlight the efforts from the staff over the year as well. I think that the contributions that everybody's made to this story, which hasn't been an easy one, is really allowing us to take the company and move it forward. So, just in opening, 2025 was really a foundation setting year. The reactivation program is delivering in the field. We've heard a little bit about that. We're actively restructuring our obligations, and both are already starting to show up in the numbers. It's not just a plan on paper, but these are actual results that we're starting to see show up on a daily basis. And there's kind of two truths to what happened in 2025. The company did report a net loss of $11.3 million, of which $4.3 million of that is a non-cash impairment. But underneath it, we're starting to see that operating cash flow is turning positive, $2 million for the year. Production grew 14% over the year. And that Q4 operating costs started to fall with all of the efforts that had taken place through the year. So down 24% per barrel over the previous quarter. The highlight is really that the business is running better, the losses and accounting write-down, not necessarily a cash drain. From a capital standpoint, the company deployed almost $9 million through the year. $3.5 million went into well reactivations. And this is really proving out the strategy and confirming that the strategy is working. 17 wells were reactivated at sub 10,000 per flowing barrel, which is an attractive capital efficiency. As Darren mentioned, a lot of money was put into the infrastructure and the assets of the company to ensure that runtime and future wells that we bring on can be handled. $4.5 million was spent on plant maintenance and workovers, and $600,000 put towards pipeline and facilities. The company did raise money last year as well, so financing raised was almost $11 million. $7.5 million of that came in the form of increases, multiple increases on the senior debt. And $3.3 million of convertible debentures were raised, 3-year notes in December of last year. Net cash from financing was almost $6.5 million after repaying services and existing debt. In 2025, financing a lot was debt-based. The $3 million equity, there was also $3 million of equity raised closed post-year end. The one thing I'd like to talk about is why the reactivation strategy is working, because this is really core to the company and its ability to move forward. So we're not drilling, we're reactivating, as many of you know. This is a risk profile decision, and it's based on the fact that we need to have certainty around what we're spending and what we're getting from that spend. So there's no exploration risk, no drilling risk, no new roads or facilities. We know exactly what we're getting. And I often get the questions, what has changed with the economics? Well, as Darren mentioned, we've got purpose-built sand management, sand suspension chemicals. Shubham talked about the improved PCP pumps, recycle pumps, plus structurally tighter heavy to light differential. And this is why it makes sense for us to turn on wells that have been offline for 20 years, wells that we already know the subsurface profiles of, that were once economic, now we're turning into cash flow producers. The result that we've seen is roughly 19 reactivations and 64 workovers since late 2024. Loose land production is up over 300%. And in under 18 months, an 8-year production high at loose land, as Darren mentioned, publicly announced in March. The economics under each reactivation are roughly about $150,000, so we're not spending $1 million or $2 million drilling new wells. These reactivations come with 6 to 8 months paybacks and capital efficiencies far below the cost of drilling new wells. And as Shubham mentioned, we've got 140 more of these, so the future over the next 2 to 3 years is clear on what the company intends to do and how it intends to meet that 50-year reserve life index. The recapitalization of the balance sheet is another item that we're continuously working to address, and the evidence behind that is that every keep in mind these figures are already in our audited financial statements and MD&A. It's not a track record, it is a track record, rather, it's not a forecast. $2.4 million of payables were converted to equity. $3 million of new equity was raised after year end. The senior term loan maturity was extended to August 31, 2026, and we have some ongoing discussions to either extend that further or look at new options. The portfolio was also strengthened, so the company acquired White Tundra Petroleum in August 2025. We also consolidated the Cuthbert working interest to 100%, which we heard about earlier. So now retaining full control and economics of the core asset. The Q1 early momentum, and so we've seen a massive swing in profitability in the company in Q1. Realized revenues rose from $58 a BOE in January to $87 a BOE in March, and this was published in our Q1 financials and MD&A. The operating netback expanded to $5 to $28, and we've seen further increases of those that will be reported in Q2. And March alone was 80% of the quarter's net operating result. I think we have a slide on this a little bit later, but you'll see the significant upside swing from January and February and then to March with the increase in commodity prices. The Q1 operating netback was up 20% versus Q4. Operating costs were down 16% year over year in a quarter that's traditionally a colder quarter where we have to deal with cold weather. We also experienced 0 pipeline failures, and I think this is really a testament to the work that the operations folks are doing in the field and the pipeline work that was done last year. The shareholder deficit improved by $2.1 million, and payables were reduced $2 million in the quarter. So we still posted, to be candid, we still posted a net loss of $2.5 million in the quarter, some related to some higher financing expenses. The going concern still applies, and these figures are unaudited. But WTI near $100 since quarter end points to a stronger setup, and I would argue a much stronger foundation with a healthier balance sheet going forward. I talked about this slide mostly, that the recapitalization is working, so I'll move here to the next one. The going concern, right? This is one that myself and the financial folks think about on a daily basis. To say plainly, our auditor issued a clean, unqualified opinion. However, with an emphasis of, a matter of concern on the going concern issue. Part of that central issue was the classification of our senior term loan as $19.7 million, and as I mentioned, we're in discussions right now to extend that and classify it as long-term. At the end of the day, we have a defined plan, and the operational and financial results are above show that we're executing. So the path forward, as disclosed in our MD&A, we continue to advance a range of recapitalization options, refinancing and extending senior debt, converting vendor balances to equity or longer terms, and pursuing additional financing, including equity. A stronger, growing reserve base improves our collateral and strengthens our refinancing position. You'll see, just based on the previous presentation here, there's a lot of opportunity to convert that 2P into PDP reserves over the next number of years. So the objective: recapitalize the balance sheet, fund the reactivation program, and put the going concern question behind us. Impairment was struck last year on the reserves at $60 WTI prices, of which we've all seen a recovery on in the recent news. And so a significant 2026 tailwind exists to be able to move forward. The slide here speaks to capital structure today. There's roughly about 605 million shares outstanding, with opportunity for warrants to be exercised in the coming months. On a fully diluted basis, the company is looking at $821 million, which includes all of those conversion events. Shubham mentioned the market cap, $24 million, total debt, $29 million, enterprise value of $75 million. We'll be putting some information out to the public that talks about what this looks like going forward and the future state of the company. We've got a slide in here just on commodity price risk management. WCI differential exposure is hedged April through September. WTI flat pricing exposure is currently unhedged. There's 300 barrels that are associated with 300 barrels per day associated with the WCS hedge, which is at $12.40. And then looking ahead, the differential hedge expires in September, but we are evaluating additional production options for Q4 2026. And we'll look to hedge both WCS differential and WTI going forward. This is the slide that I mentioned here, where we see the real uptick in profitability. January, February, 57, 58, $61 WTI pricing, increasing to $89 in March. That's changed the top line revenue significantly from $1.3 million per month to over $2 million. And recently in May, seeing the highest profitability that we've seen per month since I've been part of the company, which is very exciting. We've seen commodity prices come back to $80, $75, I believe, roughly today, which still offers a significant monthly revenue stream of $1.8 to $2 million at 750 to 800 barrels a day. But I don't think that we're happy sitting at those numbers. We want to continue to grow the company, and I believe we'll be putting out some information to the public about that in forthcoming weeks as well. I'll be the first to say that, we've still got significant challenges that exist in the company. We need to recapitalize this company to be able to support the 50 years of reserve life. But we're showing you that the plan is actually working. It's working in the field and on the balance sheet. Our focus in 2026 is completing the recapitalization and turning the momentum into a balance sheet that stands on its own. We want to build this company for $60 oil rather than just getting by. And so that's what you can expect from us on a go-forward basis. Shubham, maybe I'll leave it to you for any closing thoughts that you have.
Yeah, thanks, Chris and Darren, and the board as well. And just want to reiterate that we're very proud of our team, many of you whom are present here today, and our field team who have gone through significant challenge. Sometime working with vendor arrears that we were working with. We've been able to build relationships with landowners over the last 12 months. Relationships with people that did not want to work for us are now wanting to come back and be a part of this story. And really, that takes time. With a lot of people in the field and in small towns, it's about consistent deliverables, consistent communication, and getting back on track. Some of which is shown here through the industry recognition piece. We're not just here to do our reactivations and sit on the sidelines. We actually want to be out in the community showing what we're doing. Part of it, you can see here, the World Outlook Conference, the Energy Roundtable. We were invited to speak at Artificial Lift Conference on our reactivation strategy, along with the heavy oil recycling. We presented at SP Calgary Lunch and Learn, Illuminate Champions for Change, as well as at the Global Energy Show, which is a big testament to the company's success and being out there, being public with what we do, and sort of sharing a lot of those details. And with that, I will thank everybody again for your continued support. It hasn't been an easy journey, but we're going to continue to chug along here and keep pushing the company forward. We know we have the asset base to create huge performance here, and it's just about getting there after some tough WTI pricing months. We're now seeing some of the best months we've had ever, and taking that and just putting that back in the ground, hitting some key milestones, and then as those barrels go up, we just continue to generate more and more cash flow on the operating level, and then it becomes a nice snowball rolling downhill. So so appreciate everybody's support, appreciate everybody being here, and we'll be here for any questions. And there's some cards too I can hand out if somebody wants to contact us directly and chat further. Thank you.